Hello, hello. Does it work? It does. Hello. My name is Afshin Moshrafi, founder of TradeWave, and we are going to go through seasonal pattern analysis and basically TradeWave. With TradeWave, you can predict the market's next move. Not exactly for sure, but this is a probability map. Based on what's happened in the history, we can predict what's the probability of the next thing that's going to happen. So with TradeWave, you can uncover hidden seasonal patterns that drives the stock moves. Did you know there are stocks out there that 20 out of 20 years they have made a move in the same exact positive direction every single year? Here's an example, PGR. Between January 21st and June 2nd, in the last 20 years, it's gone up an average of 11.42% year after year. The first one was in 2005, now it's 2025. Now, if something repeats a pattern like this 20 years in a row, it gives us a high probability that if the fundamentals haven't changed and overall things haven't changed, this is going to repeat that again. Here's an example for commodities. This is pretty incredible. In the last 43 years, 42 out of 43 years, lean hogs has gone up an average of 11.52% between April 12th and April 24th. Now, if you know much about futures, this is an incredible move because futures are really leveraged highly. So the chance of making a killing in these are incredible when you find patterns like this. Look at this. It's from 1982 all the way till last year. It's been making an average of 11.52%. The only single year that it failed was in 2014. I call that really high odds. So this was my pain when I used to trade. I've been doing this for years, trying to come up with ways of trading. I've been successful many times. I just could never be consistent. Why? Because I was relying on lagging indicators. And lagging indicators, although they are really helpful in many, many cases, they are lagging. So there are times that I'm looking at these indicators, half of them say basically buy, and the other half say sell. So which one's right? And why is it that we even use those lagging indicators with such a conflicting information? And it's all because something I learned later. It's basically you're curve fitting at a certain time frame, and if your time frame wasn't right, it's just not going to give you an accurate signal. I'm going to put this one on my in the homepage of TradeWave. It's good to watch it. This is Erin West. She is a professional trader and a trader for women. She's been using TradeWave for a year, and now she calls it indispensable. No, I guess that won't work. Just take a look at it on the homepage of the website. It's going to be there next week. So seasonality, I consider it the missing piece. I cannot believe everybody doesn't use it. But then the reason everybody doesn't use seasonality is because either they don't know about it, or if they know about it, they have no idea how to do it, because seasonality is extremely difficult without the right tools. And God knows, I mean, I have a book coming out. You can read about the story when I was trying to use seasonality, and it was just so hard. TradeWave is just a marvel of mathematics, and it just basically digs through everything. There is not one pattern present that TradeWave didn't find. I am a programming and artificial intelligence expert, and my background is in math and physics. So I can tell you for sure there isn't a pattern out there that TradeWave has not found. It's not possible. So it gives you a statistical edge, so you actually don't have guesswork. Now imagine if you're using indicators, but you don't know if you're on the right time frame or which one of your signals are true. Imagine if you match that with TradeWave. Suddenly, you know which signals are more likely to be correct. It's indispensable. So I am a data scientist. The last work that I did before I did TradeWave, I worked as an AI researcher for a medical company. It's a long story how I ended up doing TradeWave, but it was not something I had originally planned. I was actually doing it for fun, really building it for myself. Also, I first heard about seasonality from this guy called Jake Bernstein, an old-timer that basically opened my eyes to seasonality. It's a long time ago. Now let's go to TradeWave. Yeah, you can come into TradeWave and just click on Wave Viewer, and you come out to this screen. And what are we looking at? TradeWave has two different sections. I usually cover this. What I just covered is called the Wave Viewer. And the left side, which I didn't cover, this one, is the opportunity table. You can actually use the Wave Viewer without the opportunity table. What are they? Opportunity table is the result of this data analytics that goes and analyzes over 1 trillion data points and comes back and every single day finds a pattern, and it ranks it by Sharpe ratio, and also you can rank it by one of my measure, which I call a TradeWave ratio, which is more interesting than Sharpe ratio, I would say. I use it a lot. I will explain that in a minute. So it ranks them. What's Sharpe ratio? Sharpe ratio shows you when there is a seasonal pattern, how consistent it is. But let's come back to this. The right side is the Wave Viewer. This is how you test and analyze seasonal patterns. Let's just go and see what I mean. Let me say I want to analyze Apple, A-P-L, from today. Right now it says for the next 30 days. How has Apple been performing from February 15, which is today, for the next 30 calendar days, which ends being at March 16. This is what we end up seeing for the last 10 years. Look at this. It went down on 2015, went up 9.65% in 2016, and all of these, and it lost 24% in 2020, 5.72%. So this is actually not a good pattern, so this is not a usable seasonal pattern. By the way, what are these light green parts? Well, the light green parts are very interesting. The green part means from the date that you start, which right now is 2/15, and it, by the way, it shows you 2/15 here, and then 30 days, 30 calendar days later is March 16th. The dark green part is from today until the close of the day at the end of the seasonal pattern. The light green part shows you what was the extent, the maximum that this security went up. So if, for example, by some luck you knew to go and sell Apple at its high during this period up here, this would have been the maximum money you could have made. An additional 3.17% in 2018, when you would have made 2.91. So this just shows you the extent of the move. What we're seeing on the bottom here is something I call trend chart. Trend chart is another mathematical, very interesting mathematical thing. You don't need to learn exactly what it does. But in order for you to know what it is, it takes the last 10 years, because we're looking at the last 10 years, and it takes the entire year for Apple, and it creates an average move. So the trend of this chart becomes what's important. This shows a slight down. That means this trend was down during this period of time if you look at the last 10 years. We can always increase this number of years and go on and look at last 20 years. Here's Apple last 20 years, and then the trend chart on the bottom becomes average of last 20 years. The only thing you care about here is the direction. If it's sideways, means it's pretty neutral. If it goes up sharply, means it's good. This has been a high-flying time for Apple. For example, you see what right here, when it goes up, we can go and select that time frame. And by the way, this is an interactive way of just going and putting your information up in those. You can do the same thing up here. But look at this. We just found a time that Apple does really well. When? It's from June 28th until August 3rd. For the last 20 years, Apple has gone up 13%. And look at these, even on the years that it's lost. Look, it lost in 2024 between this date range. However, it went up 12.63% first. You could have been out with a huge profit, not a loss. There it is. 2019 is the same thing. It went up 11.85% during this date range before it closed for a loss. 6.78% in 2015 before it lost 4.89%. So this actually is a really decent date range to be in an Apple trade. So this is the basis over here of the wave viewer. If you click the right arrow over here, you can see three different things, by the way. Trend chart, wave stats. Wave stats gives you the mathematical details of this pattern. The average gain 3.11%, the average loss was 3.74% on the losing years. And then look at this, cumulative return 410% for Apple, just for this time. And you can compare it with S&P buy and hold. If you would have held for the last 20 years, you could have held S&P 500 the whole year for 20 years, you would have made 388%. But if you just went and bought Apple on the 28th of June, and you sold it on August 3rd, each of last 20 years, you would have made 410%. You would have beat S&P 500 in only 37 days. You could have been in Apple trade 37 days and you could have beat S&P 500. Of course, there's tax implications, but imagine if it was in an IRA, no tax implications. You would kill it. 37 days versus 365 days on S&P 500. The rest of the data shows you these are 75% of the years was profitable, but if we actually count these light green ones, because we could have been out with a stop loss and actually gained on these, you would have been more like 95%. You would have lost in 2010. It just went down. And data is not updated. That's not good. That actually is the this is supposed to be the real-time data. The current price chart would be here. It's not showing right now. Something went wrong over the weekend. But if you click any of these bars, it shows you the historical trade for that year. Let me show you this example here. You see in 2008, when it was a loser, it lost 8.49%. It went up first to here. So it had a gain of 8.05% over here before it dropped to lose. So the light green part points to this high part right there. So this is the basic of the wave viewer, but this is not the coolest part. You don't have to do any of these. Just go to the left, and the opportunity table just finds the best of the best. You don't have to go and find these manually over here. Opportunity tables data analytics platform does that on the background daily by crunching a trillion points. Here it is. You can go and select any of these markets that you want. You could basically find out what's the most seasonal pattern in Dow 30 stocks, one of the Dow 30s. Look, the top pattern right now, starting today, is Microsoft. It's ranked the highest based on Sharpe ratio. If you would have bought it today and you would have sold it on the 15th of August, last 10 years, you would have made an average of 14.25%. And that's the dark green part, not the light. If you were able to capture the light green parts, you would make more. And TWA, by the way, shows you that. This is a maximum you could have made if you had figured out how to sell at the high, which is really not realistic. It's just for ranking purposes. Second one is Amgen, followed by Amgen, but this is 182 days versus United Healthcare. It goes all the way to November 24, 281 day. This is a good one. Amazon. Amazon is actually a great trade today. Actually, today means really Monday. From today or Monday, which is the 17th, until April 19th, which is a total of 62 days. In the last 10 years, Amazon has gone up an average of 7.67%. However, look at the light green part. An extra 8.22% here, extra 9.06% here. If you do some of the trading styles that I usually do, which is at the money credit spread, and I have a book coming out in the next week or two. You can read about it there. Also, in some of my Zoom calls, I show it to people. You capture all of these in a matter of days. So this actually is pretty good. So now, this is how we just go through all of these. Oh, actually, I didn't know Amazon is on Dow 30 now. Very cool. So we can go and find it. Let's say you're just interested in one of the NASDAQ stocks. Just select the NASDAQ list. CTAS is on the top, Microsoft. Or you could go, personally, I'm usually on S&P 500. This is where I find whoever I want to find. But we also have Wilshire 5000, which is all of the tradable stocks in the United States. Look at the number of opportunities. It comes up with 511 opportunities that were 9 out of 10 years profitable. And on the top of the list is a short one, Viatris. From now until November 2nd, it's gone up all of the last 10 years. Also, another thing you can do, if you're not interested in it, this 10 years is here by default. What if I'm interested in patterns that were profitable 15 years in a row? I just select 15 over here, and here it is. We found 10 opportunities, 8 longs and 2 shorts that were profitable each of the last 15 years. With Cintas Corporation being on the top of the list from today until November 18. It has gone up an average of 21.31%. With some of these light green parts captures, you would make more than that. And it's 277 days. How about last 20 years? Do we have much? We only have 19 out of 20 years. There's no 20 out of 20s for today. Sometimes there is. Look at that. The top one is Church and Dwight. The last 20 years, from today until April 17th, it's only 61 days. It made an average of 5.56%, but it's been so consistent, it just lost in 2020. But last 4 years, it's been making a killing. This is only 61 days. Church and Dwight is, I think I used their toothpaste. They're consumer discretionaries. So you can go, it's really up to you. And over here, this is the probability years. You can reduce the probability years. And for example, look at that. For 30 years, I had to go to 28 of 30 years in order to find something. Again, Church and Dwight is the only one. I mean, it's been killing. You would have actually made 30 out of 30 years right there. Let's see, how far can we go? 40 years. Chevron, 90% of the years was profitable for last 40 years between today and July 30th. Coca-Cola, nice source. Let's go back to 10 years. You can also go to like 5 years if you wanted to. And the purpose of 5 years is, what if a company is newer and you're still interested in it? You can see how they've been performing last 5 years. It comes up with 1,030 opportunities, 211 longs, and 819 shorts. There are a lot of shorts around right now, but I usually look at 10 or 15 years. So I'm on Wilshire with 10 years, 10 out of 10 years, 82 opportunities, 62 longs. What if I'm only interested in short term? I'm not interested in 200-day patterns. I am interested in 10, maybe up to 60 days. I can go over here to filter and type 10-60. I type 10-60 and you get a filter by number of days. This is the reason we define our patterns with number of days. Because We use this for filtering quite a bit. So I just did 10-60 days. I end up with 12 opportunities. 3 longs and 9 shorts. In the next 2 months, there's a lot of high probability shorts. I am not a fan of I do very rare shorts. Most of my losses have ever been on shorts. So I try not to do shorts unless there is an absolute confirmation that we are in a bear market. But still, in a bear market, it is not easy to be consistent. It's easy to make money here and there, but consistency is going to be difficult. Here's the first one. I've never seen this one. Cytokinetics. By the way, one of the cool things, one of my testimonial guys says that I didn't know there are so many possible trades that I had never even noticed. And that's why, because you find that right here on the opportunity table. Let's look at the long one. Integer Holdings Corporation. Look at the trend chart. You see the sharp up? It has a sharp up until 28th of February and then a sharp down. This is one volatile stock. And you see, the bottom was here. What if I want to see how did it do when it was, if I had bought it here, I just dragged this here. Look at that. This year, it's gone up 1.15% so far. And what if I go all the way to the edge? Yeah, this is pretty good. I've never heard of this one before. I actually hadn't noticed it. But this is one volatile stock. This is one of those things that if you want to trade, you want to get out of it, because that sharp drop, these patterns shift at times. So you don't want to be there right here. You want to be out as soon as possible because of this incredibly sharp drop that comes up. Let's go back to S&P 500. That's the one I usually do, and the reason for that is S&P 500, which is 504 stocks, is definitely the highest quality stocks in the United States, and I prefer those. And the reason for it is I usually trade options, and they're also have a very close spread. That means the spread means if you're buying or selling an options, the values are not too incredibly different. Oh, look at Pfizer. Has a short time, but these are very small. See, average of 2.88%. Tiny. So this is just the basics of the stock part. Now I also have people that do research on this site. This site is made for all types of data analytics type research. What if we want to look at S&P 500? Let's go to indices common. I type SPX. Look at SPX based on last 10 years. And it just does this 31-day thing. Let's go to buy and hold. What if I go and select buy and hold? In TradeWave, when you select buy and hold, it changes the date range from January 1st to the following January 1st, which means you never get out. This happens for all the stocks, and all you have to do is go on the date range shortcut and select it right here. And by the way, these are ways for you to very quickly put a date range in For example, if I wanted to know what is this security performing on February, month of February, I click February here, and it just sticks the right date range in. See, 201 to 228, and you can also reflect it right there. Opportunity window shows right here, and then you can take a look. Average gain of 3.61%. or March, or first quarter, or winter. When I click this button, it changes the start date so it's easier to see. Or today to year end, or year to date. You can do all of those, but right now let's go back to buy and hold. So I can go and see how many years of data we have. We have 97 years of data for S&P 500. This is S&P 500, buy and hold for the last 97 years, starting in 1928. I can click here and go look at the stats, and these are fascinating. Out of last 97 years, 66 years S&P 500 was positive from beginning to the end of the year. 31 years it was a loser. And if you would have gone into S&P 500 at the beginning of 1928 and kept it till today, you would have made 32,942% cumulative return. The average gain on the winning years was 18.48%, and on losing was minus 14.27%. Well, there are other ways we can filter these. And one way is by presidential election years. Let's go and click on presidential election +1, because today is this year is presidential election +1. Presidential election was last year. I click that. And here's presidential election +1 performance for all of the years. And if you look at the years now on the bottom, they're apart by 4 years. And then it comes all the way to 2025, which is this year. The last PE +1 was 2021. And S&P made 29.61%. Before that was 2017, and so on. So look at this. Since 1985, except for 2001, every year was positive on PE +1. Then in the 70s, it was all negative. Those are the high inflation years. And then the years are different. But since 85, it's been positive. That gives me some knowledge that this year could also follow. However, since these are high inflation years that were red, and now we're in high inflation years, I am not so sure, but we'll probably have a better idea soon. Let's go and look at the trend chart. The trend chart also shows us how has S&P 500 been performing. Look at this. We are right now in here. Do you see this sharp drop right there? So on PE +1 years, this thing drops quite a bit. Oh, let me just change it here, 18. You see that? Most of these years was negative. From the 6th of February until 23rd of February. This year so far, it's dropped 1.32%, and then it went back up. And it is positive right now by 0.51%. Still have some time to see how this year goes, but it looks like this is going to go back down. or so I think. But that's because of this. It just keeps doing that every year. How about this side? Now it's a sharp up, right? Let's see what the dates are. This one is from 23rd of February until March 14th. It is a sharp up. It's gone up 79% of the years. And it's pretty positive here. 79% of the years was positive. Again, 2001 was bad, so was 1997. But it's since 2005 it's been positive for P plus 1. How about this down here? "67% of the years, 2 out of 3, it's been down." 2021 it dropped 2.91%, and then it ended up closing positive at 2.75. How about from here to there? Look at all of this up. First we're going zigzagging up and down here, and then suddenly we have a high probability time. What if we want to look at it here? Look at that. S&P 500 has been positive, pretty positive, 71% of the years, from April 5th until August 2nd. How about just this part? Look at that. Now that's beautiful. That is showing us 79% of the years. Since 1985, also it's been positive only. S&P 500 has gone up 4.79% in average. And it's a very positive time here. Then it goes through the very common negative time that starts sometime in August and it goes all the way to mid-November, and then we have a very positive time after end of November, going up again. But this is how I analyze S&P 500. I use the presidential election plus 1. You can also do it with some stocks. Let's say IBM. IBM, we have 62 years of data. Oh, it's probably better to do it with something like Boeing. We have the same amount of data. Yeah, 62 years of data for Boeing. And buy and hold. But let's go and do presidential election plus 1. You can see how volatile Boeing is, even since they haven't, even when they didn't have all these problems they do now. But Boeing is very volatile. Boeing also happened to have a very high up, right around here. Look at that. Boeing's been very positive during this time. 2021, I think, was at the heat of their beginning of their problems. But things are looking up for Boeing now, hopefully. But look, Boeing's been very positive on PE plus 1s until 2021. Oh, let's just take a look quickly at ETFs. ETFs are some pretty amazing stuff here too. Right now on this list, I remove the filter and then take a look. By the way, I can sort by TWR, which gives us a better idea. Look at this one, S&P fund. This is consumer discretionary sector itself. It's been very positive from 17th of February until 16th of August in the last 10 years. And in 2022, it went up 6.27% and dropped. If I click this, you can actually view that. You see it went down, it went up. This is where the light green part is up there. And then it dropped sharply in 2022. Let's also take a look at Forex Liquid. Yeah, I advise a hedge fund, and we take a look at all of these for them. So now let's take a look at some of the features of TradeWave that makes trading easier. Let's go back to S&P 500. You have what I call, let's select one of these long ones, or actually 20 to 90. Amazon. Oh, I'm actually probably going to trade this one. Let's say I want to save this one. I just click on plus. Oh, I have too many. Whoa. Yeah, I've been clicking too much. When you click on plus here, you end up adding another the opportunity to your portfolio. Look at this. Oh, I call this one the book. I have a huge list of portfolios, and oh, I have some for the webinar. Look at this. I had already saved these for the webinar. By clicking on plus, I'm gonna have to go and clean up so I can do this. And then any of them that I saved, I can bring it back. Just click on this. Recall. Here's an opportunity for Chevron that I had saved from 30th of January until May 7th, which was positive 83% of the years with an average profit of 10.24%. That was Chevron right there. Also, every time you do this, it creates a report, a custom report. Let's say you wanted to send this something you found to someone. Here's the 58-year custom TradeWave report, and these are shareable. Here's Procter & Gamble. So anything you either find on opportunity table, or if you make modifications and find anything you hear, you can click on plus and save it. You can also click here and set up Google Calendar notifications in order to remember the start date and end date of any of these. And you can also simulate trading by putting your number of shares and seeing how it goes up and down over time. Let's see, I have some stuff. Oh, look at this. Some of my patterns from before. I had Apple, Microsoft, S&P 500, and Amazon. In 2023, I had it here. and the day range stays here, and then you can see exactly how much any of these made percentage wise. See? And it also tells you what's the investment and the ending value of it. You can also always change the number of shares. You can also click on this down button and save an image, and you can share this image. Also, when you go here to where the stats table is, you can always click on this button and have it saved as a CSV. See? That's a CSV with all of this information. Let's see. Also, let's take a look at what other markets we have. Also, I'll cover some of the foreign markets. London Exchange has some incredible patterns. Actually, I have to figure out if I can trade some of them. Some of them have incredibly high Sharpe ratio and TradeWave ratio, which makes them really attractive for trading. Also, government bonds, which I know nothing about. I just know the data. Korea Kosdaq sounds just like NASDAQ. And that's pretty much it. I think I covered everything I wanted to cover. Oh, futures and commodities. Let's take a look at those. You can always trade options on futures and commodities, at least on Thinkorswim. Here is, top of the list is Eurobond futures for Germany. It goes down this time of the year. Also, gasoline commodity is, oh, look at that sharp up. Oh no, gas prices are going up. Through 5th of March. Then they drop and they keep going up. But look at that. Based on last 10 years, gas prices peak right here. I thought summer's gas prices go up, but not based on last 10 years. Now we have 19 years here. Yeah, the peak is end of April, beginning of May is a peak, and then it keeps going down through the summer. That's completely opposite of what I always hear on the news, at least. Here's oats. Oats has very distinct patterns. Yeah, I used to do day trading with futures, but I don't do that anymore. That was nerve-wracking. Here's lean hogs. We happen to have the UK data. That's that incredible thing I showed that one early. Look at this, last 45 years. You see that incredibly sharp up. This is the craziest pattern I have ever seen. It's actually based on the last 45 years. It's 98% profitable. The only year that it wasn't, 2014, it dropped 0.32%. And that's between the 8th of April and 24th of April. Every single year. And my wife was actually saying this must have something to do with Easter. And then look at this. It does the exact opposite thing in August. Right there. Look at that. Same thing backwards. 10th of August until 20th of August for the last 45 years. It is also 98% profitable except for 2020. Also went down 3.48% first and then went back and made money. This is crazy. I just checked this year. I'm going to actually try to trade these. I can, on Thinkorswim, I can trade options on these futures. I am going to try some options. All right. Let's take a look at some cryptos. Yeah, our cryptocurrency data is not the greatest, but pretty soon it will be upgraded to a new data set. But if you trade cryptos, this definitely is helpful, although we don't have incredibly large amount of data, but there's some. Right. That is all I was going to cover. Let's see. All right, I hope you guys enjoyed this. This was my test webinar. We are still haven't started marketing this yet, but it's going to happen in next couple of weeks or so. This will be heavily marketed. But this was a test. Thank you for joining, and we'll see you soon.